All right, we have a lot to cover today, but here's the high level. The global rate cut cycle is now in full swing. And even though it's really only priced into the S&P 500 at this point, I think it's only a matter of time till all risky assets, including crypto and growth stocks, start to price in the Fed pivoting to cuts as well. All right, first up for today, we have to talk about the Bank of England. That's because after keeping rates higher for longer than pretty much everyone expected, they just cut rates by 50 basis points. That's right. The Bank of England just cut rates despite the fact that CPI in the UK is still over 10%. This is important because consumer sentiment is highly correlated with consumer spending, which is roughly 2/3 of the US economy. So if consumers are feeling better about the economy, it's likely that GDP growth will pick back up, which means the Fed could soon begin cutting rates. Basically, the market is beginning to price in the Fed, cutting rates because inflation is cooling and consumers are feeling better about the economy. In fact, they have a correlation of around 0.6. With that said, Bitcoin is beginning to show its own strength as well. Sure, there's still risks like a stronger than expected CPI report or hawkish comments from a Fed member. Now, in terms of what I'm actually buying, I'm mostly sticking to my regular strategy of buying the dip on any major index. I've also been buying the dip on gold and silver, as well as they should do well during an inflationary depression. But outside of that, I've been mostly investing in my own companies. But at this point, it's clear that inflation is cooling and that the Fed is eventually going to pivot. And so long as nothing crazy happens, I think it's only a matter of time until the market begins to recover. Take a look at this chart of the hash rate. As you can see, it's barely taken a hit during this bear market. In fact, it's actually recovered to levels above the 2021 bull market. This shows that miners are sticking around despite lower prices, which means it's only a matter of time until the next Bitcoin bull market. Of course, the BOH isn't the only central bank cutting rates. Take a look at this chart of the S&P 500 since the CPI report. I do think that the market has begun to price in rate cuts, and it's only a matter of time until other assets begin to reflect that. For instance, Bitcoin is up over 17% since the CPI report, and that's likely due to the correlation between Bitcoin and the NASDAQ, which of course makes sense given that they're both highly speculative assets. We can see that it's clearly shot up since then. But what's really interesting is the fact that tech stocks have done even better. In fact, the NASDAQ is up nearly 13% since the report. Most altcoins are still down big from their all-time highs. However, I think that will soon begin to change as well. After all, the market does tend to price things in months, if not years in advance. So with the Fed potentially cutting rates as soon as May of next year, I wouldn't be surprised at all if we see many altcoins begin to recover in the coming months. Earlier this week, the ECB cut rates by 25 basis points as well, and the market is currently pricing in another 25 basis point cut from them next month. And with that said, let's go ahead and get started. But like I said earlier, the market is only pricing in one rate cut from the Fed this year, which would be in May of next year. But recently, there's been a ton of new data that suggests the Fed may soon be cutting rates as well. For example, we got the FOMC minutes from the last meeting, and they showed that almost every single member was in favor of slowing the rate hikes, which they did. Then we got the latest CPI report, and it showed that inflation came in cooler than expected. The core CPI also came in below estimates. And perhaps most importantly, the reports show that shelter inflation is beginning to cool as well. So no, it wasn't zero, but it's a step in the right direction. In fact, lower inflation is beginning to become a trend. Just look at this chart from Michael Burry that shows actual inflation versus the market's expectations. As you can see, the market expected far higher inflation, especially when it came to the core CPI. This chart perfectly illustrates why the market is beginning to price in rate. Because it seems more and more likely that the Fed will soon begin cutting rates. Not only that, but if we take a look at the latest Michigan sentiment report, we can see that the market was once again expecting far worse. And so far, it looks like this expectation is already beginning to pay off. Now, while I'm not sure how much of that is due to the CPI report specifically, now, I know some people will say that Bitcoin is uncorrelated with the stock market, but that simply isn't true. Of course, not all cryptocurrencies are doing well. Basically, my overall outlook for the markets is that we've seen enough signs that the bear market is beginning to reverse. And that's why I've been positioning myself for exactly that. So with that said, I would love to hear your thoughts. Are you buying the dip? What are you buying? Let me know in the comments below. As always, you guys, thank you so much for watching. I really appreciate it. And until next time,